If an index fund and stock got married, they would have a child called ETF. An ETF, or exchange-traded funds, is a type of investment fund that holds a diversified portfolio of stocks, bonds, or other assets. ETFs are traded on stock exchanges, allowing you to buy or sell them throughout the trading day at market prices. Think of it as owning a basket of assets from multiple sources in any particular niche like gold, bonds, or stocks, without buying each one individually. Like index funds, welcome to the channel. This is the ultimate destination for financial empowerment. Here, we decode the secrets to smart hustling and clever investing. So hit subscribe, ring that notification bell, and let's build wealth, one strategic move at a time. Like index funds, most ETFs are passively managed, diverse, and low cost. ETFs, similar to stocks, are bought through a brokerage account and traded on an exchange anytime during the day. This flexibility lets you easily buy or sell ETF shares. Investing in ETFs is a strategic move to make your money work for you, creating opportunities for wealth accumulation over the long term. It's a proactive step towards financial empowerment, allowing you to achieve personal goals, from buying your dream home to securing a comfortable retirement. In this video, we will share with you all the information you need regarding ETFs. How can you get them? Why should you consider investing in ETFs? And where can you invest in them? The convenience of ETFs has made them an increasingly popular investment tool around the world. We have about 6,000 ETFs present in 60 exchanges around the world. In United States markets alone, ETFs trade about $20 trillion worth of shares per year. That is higher than the GDP of the nation. And if you subscribe and actively follow up with this channel, we'll keep bringing you more opportunities to grab a piece of the pie and grow your wealth.
When you buy that one fund, you're essentially just buying little bits and pieces of everything that it owns. So number one, that's really convenient, but number two, it's also offering you a lot of diversification. And all diversification really means here is that your risk is now distributed across all of the assets that you own.
Let me explain to you the workings of ETF through an example. Let's say Jonathan starts a sports show company. The company does well, and Jonathan decides to go public and put his shares on the stock exchange market. Specifically in the Worldwide Apparel ETF, the ETF comprises the top 1,000 highest-earning companies in the apparel industry, including Jonathan's, and tracks their index, which is the average market value. Now, Susan, an investor, could spend a whole lot of money to buy stocks in all the companies individually, or she could spend less money and buy an apparel ETF, spreading her investment evenly across all the companies in the ETF, giving her an incredibly diverse portfolio in return. Now hold on, like everything else in the world of investments, even ETFs have their downfalls. For one, if the value of any one of the stocks goes down drastically, there is a considerable delay in the detection of the price drop, as ETFs are passively managed funds in contrast to an actively managed fund where a fund's manager steps in and replaces the bad-performing assets with another. But it should be noted that such an offset in an ETF is barely noticed, as it is a consolidation of 1,000 other such companies whose trends compensate for this downfall of one company. All this might have you wondering, what is the difference between an ETF and an index fund? They both sound the same. Well, to put it simply, the difference between them is the ease and convenience that comes with ETFs. They are easier to enter and exit. You can buy ETFs in smaller sizes and with fewer hurdles. By purchasing ETFs, investors can avoid the special accounts and documentation required for mutual funds. ETFs can be bought and sold at any time, and ETFs are lower cost and more tax efficient. So if these aspects of ETF attract, you can try out Fidelity Investments, which allows you to trade with stocks in the US market and with ETFs. With features like free withdrawal, no deposit fee, and a whole bunch of educational videos, Fidelity is a great platform for beginners. Another tool to keep an eye out for would be Axos Self-Directed Trading Program. Axos' selection of transaction fee-free mutual funds and low minimum funds is extremely budget-friendly. All mutual funds on the platform, over 10,000, are free to trade, and there are more than 1,000 funds with a minimum of $100 or less, a perfect deal for a novice trader. And another tool that has come up is the E*Trade platform from Morgan Stanley. It comes with some top-quality educational material and no minimum deposit for you to start trading. Their interface is extremely user-friendly and oriented toward making beginners feel more welcome and making investing easy for everyone. And the best tool out there to help you with your investments and money-making journey is this channel. We have a mission to help make investment and modern-day finances more accessible and less intimidating for everyone. If you want to grow your wealth and retire early, subscribe to this channel and turn on the notifications to get an alert whenever we post a new video. Also, share this video with your friends and family to help us achieve our mission.